as well that'll be in focus. We discussed the large cap, but Mindtree and Cyient, both of them report their numbers. What do we expect from them?
Well, Mindtree, very strong revenue growth, and that's going to continue. This quarter, we're working with a dollar revenue growth of 4.3%, constant currency revenue growth closer to 6%, and Mindtree has seen some solid growth over the last 5 or 6 quarters. So strong revenue momentum will continue. Margins will come under pressure owing to the wage hike. The key to track will be retail. The company has a significant exposure to retail versus peers. In the last quarter, the company faced 2 client-specific issues. Is that something which is getting worse? Or what's the outlook on retail? That's going to be tracked very closely. In terms of guidance, 20% plus EBITDA margins. That's what the company had spoken about. Do they maintain it? And secondly, what about their aspiration to deliver industry-leading growth this year? That shouldn't be a problem given how strong their growth is. The other one is Cyient, also post-market as big top-line number. That's 9.5% in dollar terms. In constant currency terms, it should be a growth of close to about 12%. But this is aided by acquisitions. The organic growth for Cyient is expected to be about 2 to 3%. Margins flat. FY23 revenue as well as margin guidance is likely to be maintained. Here, the attention is more on what happens to the DLM business, design-led manufacturing, DLM. Now, very recently, the board constituted a subcommittee where they were going to explore monetization options, either by way of a part divestment, an IPO, a spin-off, or a partnership with a strategic investor. It probably is in very early stages, but progress on that is going to be very crucial because DLM has not performed for the company, but it still contributes close to about 15% to the top line. So, Nigel, that's the key, more than the numbers, the progress on this DLM business monetization.
Interesting one, Reema. In fact, Cyient to be